So what are the top 5 misconceptions that most people have about forex trading? So let's talk about that today. Coming up next. Okay guys, I'm here at Changi Airport Terminal 2 because I'm flying to Malaysia today. So I'll try to give you these 5 points without feeling awkward because there's a lot of people here. Okay, the first misconception is a lot of people feel that your trading system is one size fits all. Now a lot of people think that if I have a momentum system, a breakout system, I can apply it to all the currency pairs. That is wrong. Because even if you can apply it to all currency pairs, different currency pairs have different volatility and you require a different TP target, different stop loss target for each of those different currency pairs. And you also need to understand that one trading system does not work in all market conditions because there are some systems that works in a ranging market and there are some systems that works in a trending market. And also you need to understand that not all trading systems out there can be used for entry because there are some systems that are only used for you to determine where your stop loss should be, and there are some systems that's used to determine where to put your target price, and that's it. And the other thing you need to make sure is that you need to find out which time frame does your trading system work best in, because there are some systems work best in smaller time frames, there are some systems that work best in larger time frames. And of course there are some systems that work best in all types of time frames. Okay, second misconception is that a lot of people think that forex trading is very risky. It's super risky. So is it really true? Now it is risky if you don't know what you're doing. Because think about this, is driving a sports car or Lamborghini risky at all? Well, it is very risky for the untrained driver. Because if you give that car to somebody who has only driven a car for 2 days, then of course it's going to be very risky for that person. But if you give that car to a professional driver, then do you think it's going to be risky? Not really. If it is, then why are there so many professional drivers making a good living driving sports cars? The same car, different driver, different level of risk. Meaning that it's not the instrument that is risky, it is the trader that makes it risky. If you don't have the experience, the skills to drive that sports car, to manage and trade that asset, it will be super risky for you. The reason why it is risky for so many people is because they buy, sell based on analyst opinion, they buy, sell based on feeling, they buy, sell based on nothing. No research, no experience, no skills, no training, no backtesting, no nothing. And that is just like driving a car without going through driving school. Would you want that? So to reduce your risk, you mitigate the risk by increasing your experience, increasing your skills, improving on yourself as a trader. Warren Buffett did not say risk comes from trading forex, because Warren Buffett says risk comes from not knowing what you are doing. Third misconception, it is super easy to buy and sell. It is also super easy to make money, make $1 million in the first year of learning how to trade. Now the act of clicking buy and sell is very easy, but knowing when to click buy and sell is a completely different thing. Because here's the thing, for Warren Buffett to make that $1 billion trade, he needs to put in many days, many weeks, many months of research to be able to make that one trade in 3 to 4 seconds. That's going to make him $1 billion. Because here's the thing, knowing when to enter is the easy part for most people. But knowing where to take profit, knowing where to cut loss, that is a lot more important. Because a lot of people, they enter a trade and then the problem is that the way they take their profits, the way they cut their losses is very random. It's just based on feelings. So you know that if you trade based on feelings, it's not going to turn out so well. A lot of the millionaire traders that I know, they never make their millions in their first year of learning how to trade. You've got to treat this like a career, like a profession where you need to put in tons of hours of early mornings and late nights to be able to make this work for you. And maybe on your 5th year, 6th year, you'll become a millionaire. It's just not going to happen in your first year, especially when you start with a small to medium account. Unless you start with a $990,000 account, then of course you just need a few percentage returns to be able to reach the $1 million mark. Because you need time to not only master a skill, you need time to let your account compound. But here's the good news, once your account starts to compound, your money makes more money for you, the growth becomes super explosive. Okay, the other very common misconception is that a lot of people think that to become a successful trader investor, you need to have some form of finance, economics, mathematics background. I can tell that a lot of the very successful millionaire traders that I talk to, some of them don't even have a single finance certificate. They've never studied finance in school in their life, never studied accounting. They learn everything through mentors and by themselves. In fact, some of them didn't even graduate from university. Can you believe it? And yet I've seen people with PhD in finance, they can't make a single cent from the money. All they have right here is textbook knowledge. But here's the thing, there's nothing wrong with getting a finance certificate because it will help you a lot understand the terms better. It will help you a lot in understanding the whole entire big picture of the market. It also gives you a lot of confidence in your trading, in your investing. Also gives you a lot of confidence when you go out there and talk to investors, traders, in networking events. So yeah, if finance is your passion, go and get a certificate in it. Go and get a CFA, go and get your CFT, go and get your CMT, go and get your SCCA, go and get your... Just go and get everything, okay? What I'm saying is that if you have a finance background, when you read all the books, read any finance material, you'll be able to skim through it really, really fast. There are certain lingo that finance people like to use. Alpha, beta, market efficiency theory, CAPM. And when you study finance in university, very likely your school would arrange a lot of internship opportunities for you, a lot of job opportunities for you in banks, in prop trading firms, in hedge funds. Then you get a lot of industry experience. So is it worth it to get a finance degree if it's your passion? Just go get it. Just go get it. If economics is your passion, just go get it and go to a good school. The final misconception, finally I'm done. After walking almost the whole entire terminal tour, to trade Forex you need a big six-figure account. Now because of Forex leverage, you have the opportunity to start a small account. But if you start with a $50 account, $500 account and hoping to earn $1 million, good luck with that. Unless you don't mind letting it compound for 30, 40 years, then it's possible. But if you start with $50 account, $500 account, you over leverage it hoping to earn $1 million, again, good luck with that. Because remember when I said the small accounts are not for you to become millionaire, the small accounts are meant for you to practice trading with real money. Meaning you start to get your hands dirty, but don't risk too much, so you do that with a small account. That's the good thing about Forex trading. And to be honest, $50 account, $500 account, you can't earn much. You can't earn much. If you trade it properly, you can't earn much. But here's the good news, okay? I share this in all my seminars. If you invest 10% of your salary every single year into your trading account, you start with 5K account. Using the power of compounding, within less than 10 years, it can grow until 6 figures, okay? If your returns are decent. By decent, I mean at least 20%. Well, you do 40% a year, 50% a year, you get there a lot faster. 6-figure account, 7-figure account, you get there a lot faster. Just be patient, believe in the power of compounding. Now a lot of traders in the first 2 years, they rush the whole entire process because in the first 2 years, the returns you get from that 4K account is like, what, only 4,200? Only this few $100? In the first 2 to 3 years, when your account starts compounding, that's the hard part where you don't see a big sum of returns. But when you go past that 3 to 4 years, you let the power of compounding take its effect, your account will go from like this to an exponential growth. I'll show that to you in a detailed Excel graph when I'm in front of my computer. I'm not going to detail, okay? Or if you come to my seminar, I'm going to show you the graph too. Because I'm here in the airport, I don't have my computer with me. Let me know what the other misconceptions that you had when you first started off that I did not mention. Okay, so if that, I need to catch my flight now. Talk to you soon. Bye.